This is the daily fiscal pulse for the 1st of May, 2026. Just a heads up, we're looking back at data through Friday's market close, not reporting live numbers. Let's start with what's actually moving the markets right now. The landscape is fairly mixed without a single dominant narrative taking over. You've got headlines about Iran attacks on the UAE and US naval activity in the Strait of Hormuz filtering into trading decisions. That's clearly having an impact on price action across the board. With that context set, let's turn to what the actual capital flows are telling us. We saw some real spending activity today. The net fiscal transfer came in at $110.2 billion, driven primarily by $50.4 billion in household transfers. That's a decent chunk of liquidity flowing into the system. Still, equity prices are holding their ground. ES futures settled at 7,258, maintaining a position above the 20-day moving average of 7,044. Over the past 20 days, the range has stretched roughly 728 points. So far, prices staying resilient despite this fiscal environment. Zooming out gives us better perspective. Over the last 5 days, government spending has averaged about $18.7 billion daily. When you compare that to the 20-day average of roughly $13.7 billion, it's clear more cash is cycling through the household sector and into equity markets. Looking back year over year tells a similar story. Fiscal spending through this point in the year sits at $818.3 billion, which represents about a 29% decline compared to the same period in 2025. That's a significant pullback in fiscal support flowing to the market. From a tactical standpoint, the fiscal backdrop isn't giving us a clear directional bias at the moment. Our position engages at +10, but it's worth remembering that we've seen comparable conditions many times before. Even with tighter liquidity, the S&P has historically managed around +0.7% monthly gains. Equity markets don't always move in lockstep with fiscal flows. They can and do grind forward regardless. There's also a positioning element worth noting. Leveraged funds have been trimming their positions, and those levels are elevated. Historically, readings at this level tend to function more as a caution flag than a buy signal. We're tracking something else worth attention. Fiscal transfers have climbed for 2 straight days. In the patterns we've studied, consecutive days of rising transfers have often preceded short-term ES rallies. It's not definitive, but it's a setup we monitor carefully. Looking at upcoming dates on the calendar, the Social Security payment cycle arrives on the 13th of May, which is the second Wednesday of the month and typically reshapes near-term flows. Around the 15th of May, the next major Treasury coupon interest payment window opens up. Right now there's no compelling fiscal signal pointing either way. The scheduled payment cycles coming up will be key to determining whether that changes. That's where the edge sits for the moment.